In this video, I want to talk about how do we adjust the poor man covered call if the market were to go against us. If we go back to the previous example, we are buying a dip in the money call option and selling the at the money call option. And we did this for 1693. That is the maximum risk on this trade. Of course, the market went higher, so there wasn't anything that you need to do, because if the market were to continue to go higher above 234, then you will be making your maximum return, which is about 300 plus. But what if the market were to drop? Instead of going up, the market dropped to 230. What can you do? Let's look at a traditional covered call. You can roll your call option down and you can roll it further out, giving it more time for it to recover. But there's a problem with a poor man covered call because we are not using the actual stock. We did not buy the actual stock. We buy a dip in the money call option, which is the 214. And this dip in the money call option has the same expiry with the short option. That means you cannot roll the short call option to further out in time. A traditional covered call, we can always roll the position to May, April, June, or even we can roll the option to a leaps option to recruit back the losses and giving the trade more time to play out. But in a poor man covered call, you can't do that because your long option is a substitute of the share. But we are using the long option, and the long option has the same expiry. If you are going to roll the short option to June, what happens when your April option expire? When the April option expire, you will be left with a naked short call option in June. This is what we don't want, and this wasn't the correct way to adjust the poor man covered call. With that in mind, we still can roll, but there's very limited thing that we can do in a poor man covered call. If the market were to drop to 230 instead of going up, if the market dropped to 230, our short call would drop in value. If we sell the short call for $3, when the market dropped to 230, the short call would be worth 30 cents, 40 cents, or 50 cents, depending on how much time is left. If it is very close to expiry, then it's going to lose more. To adjust the poor man covered call, we close out the 234. Definitely we are able to close the short option for less than what we sell for. So there is a profit in that. If we sell for $3 and we close it out for 50 cents, we make a $2.50 profit on the short call option. Of course, when the underlying drop, then our long call option will lose money. That's why we need to adjust the trade and try to recruit back. When we close out the 234 short call option, we no longer have a short call, and that frees us up and we can sell a short call closer to the market. Imagine if the market dropped to 230 and we close out the 234 and sell a 230 at the money call option, and we can start to recruit back some losses. How much is the at the money call option worth? It depends on how much time is left and what is the volatility level. But just to take a look, the current price is 234.92. The at the money call option is 235. It is going for 370. We can assume that if the market dropped to 230 and you sell a 230 call option, you'll be able to fetch another $3.70 on top of what you have already made on the previous 234 short option. With these two, and if the market stay above 230, the trade will still be profitable. And if the market continue to drop further, you can still roll. But every time you do a roll, your profit will get lesser to a stage. It may even be negative, which means that if the trade were to expire somewhere around 225, the trade may have suffered a little bit of loss. But that will be better than taking a full loss or taking a much higher loss. And when we do a Pullman covered call, we should never be looking at taking the full loss of $1,693. That should not be the way. This is the margin that we require to put up. But it doesn't mean that we should take this full loss. We should always aim to minimize our loss. That's why when it's time to adjust, we adjust. And if the trade really does not play out well, and you can take a minimum loss, you should take the loss and move on to another trade and look for other opportunity. In the next video, I will show you how do we improve the Pullman covered call. Thank you.